So what is the stock market? In this video, I'm going to go over some basics of what the stock market is and why people invest in it. Hey, how's it going? On this channel, we talk about stocks and options with the idea of allowing you to maintain a full-time job or trade as a full-time job. So if you're new here, consider subscribing. And today we're going into what is the stock market. Think of the stock market like a farmer's market. It's a place where you go to buy and sell goods. But unlike buying and selling fruits and vegetables, in the stock market you buy and sell financial securities. And the most common of these would be stocks and bonds and a few others, futures and options. And there's a ton of different more complicated ones, but the most common ones are stocks and bonds. So what are stocks? Stocks are a publicly traded company that you can buy portions of the company in. And these portions or slices that you can buy of the company are called shares. How you calculate the price of these shares is the company value divided by the number of shares. So in this example, let's just say the company is valued at $30 and we have 3 total shares for the company. That would make each share worth $10. These two values go hand in hand. So if the company value increases, the share price also increases. So let's say the company value increases from $30 to $45. That would make each share go up $5 to represent that company value of $45. This also works the other way. If the share price increased from $10 to $15, the company value would then increase to represent that share price increase. So all companies start out as private companies, and these companies are not listed on the stock market, and you cannot buy shares of them through the stock market. Only publicly traded companies are listed on the stock market and allow you to buy and sell shares of them just about daily. And companies that go from private to public, they go through an initial public offering, which is called an IPO. And this is when they sell a portion of their company for money. So maybe the company will initially sell 30% of their shares to the public and investment banks with the idea of trying to raise money to boost their company to the next level. The whole reason people get into the stock market is because of compounding interest. It is so much more powerful than simple interest. And simple interest is just like the interest you pay for a bank loan. The interest is always the same throughout the bank loan. And compounding interest changes based on the account value. So if you have a investing account and the account is going up and it gets 10% interest every year, that 10% value will increase as the account goes up. So 10% of $10,000 versus 10% of $20,000 is a big difference, especially when over time that account value increases and increases and increases. And as you can see in this graph, the blue line being that compounding interest, it starts to skyrocket as the years go by compared to the simple interest. Kind of just is a slow grind higher, and your money is still increasing, but compounding interest is way more powerful and gets you a lot more money in the long run. Hey, thanks for watching this video. Subscribe if you want to learn more about the stock market and really want to take a deeper dive into what the stock market is and how to start investing in the stock market. If you have any questions right now, ask me in the comments. I will get to them. And I hope to see you in the next video.